Hello guys, welcome back. This is a faculty Sudarshan from Hari Academy. This is video number 2 for past paper pro series. In this again we are taking a question from marginal costing from an attempt December 2015. December 2015 we have taken this question from marginal costing. We'll quickly read the question. In 2014, the turnover of Akash Limited, which operated at the margin of safety of 25%, amounts to 12 lakh. This should be understood. The turnover is 12 lakh. Margin of safety is 25%, and PV ratio is 40%. During 2015, the company estimated although the same volume of sales would be maintained, the sale volume of, let's say, assume 10,000 units in 1 year, and the next year also it is going to be 10,000. The sale value would go down due to decrease in selling price, because there is something is diminishing in selling price, so they are thinking that the sales value will go down. There will be no change in variable cost. That's a, in 1 year same variable cost, and another also same variable cost. The company proposes to reduce the fixed cost through an intensive cost reduction program. This changer will alter the PV ratio and margin of safety to 100 by 3% and 40%. What is this 100 by 3%, sir? It is nothing but 33 by 1 by 3% or 1 by 3. Is in simple, PV ratio of 2015 is nothing but 1 by 3 on sale. 40 percentage is MOS, margin of safety. What they are trying to ask, you are required to present a comparative statement indicating sales, variable cost, fixed cost, profits of the company. Basically they are asking a marginal statement, okay, in the form of comparison, that too for 2014 and 2015. We'll quickly getting into the sum. There are two methods to understand this sum, okay. First, which is the simplest method, easiest method for everybody, we will do that problem. Whenever the question will arise like this, you need to give a heading. Like what they are asking, comparative statement indicating sales. In short form, I will write, in exam, you will write the full form. Variable cost, fixed cost, and profits of the company for 2014 and 2015. This was the heading you need to give. And they are asking the comparison, right? For the comparison, what you need to write down? Here you will write down 2014 data. Here you are going to write down 2015 data. Here one amount will going to come for 2014, 2015, another rupees, your total column we are going to do. What is a margin statement? Sales minus variable cost. Next, gives you contribution. Once the contribution is arrived, we will subtract the variable cost, that we will subtract our fixed cost, right? What variable cost? Fixed cost. Then we arrive at the profit. This was the statement which we will basically going to follow. Okay, now, but here the point is, note number, whatever I'm going to give it in my working note, because this is going to be my main answer, okay. Whatever I'm going to give it in my working note, I'm going to indicate them, okay. What we are going to do, just see. They are asking these five things, right? Sales, variable cost, fixed cost, and profits. Obviously, the statement requires contribution. First, they have given in the problem itself turnover for 2014 is given. So we with that easily we can find out this is 12 lakh. Fine. There is no note number is required. Then variable cost we need to find out. This is my main answer. From here after my working note starts. What is my working note number one? Working note number one is to identify contribution. PV ratio is given. PV ratio is 40%. We know PV ratio plus VCR, that is variable cost ratio, is equal to 100%. If this is 40%, then variable cost is going to be 60 percentage. From that, we are going to identify variable cost. Variable cost is equal to rupees 12 lakh into 60 percentage. If you do, you will get rupees 7 lakh 20,000. This small things you need to take care. Alternatively, you can directly find out the contribution cost and net effect you can show it as a variable cost. Now the contribution you can directly do or else by way of working note, because at the time this sum has been tested. This sum weightage is 10 mark. Okay. So what you are going to do, you need to give sufficient workings, even though the contribution is directly subtracted from the variable cost. In our working note number 2, we can give contribution. What is a contribution formula? You need to write it. Sales minus variable cost. Okay, you should write. What is a sales value? 12 lakh is a sales value. Even though it is a basic question, a small nuances needs to be taken care. 7 lakh 20. If I subtract 7 lakh 20, how much I will get? 4 lakh 80. That's it. This is your note number 1. This is your note number 2. Okay, contribution is done. From that, I need to find out by using margin of safety. That is an alternative technique. They have given margin of safety. Okay, by using the margin of safety, you need to find out fixed cost. Okay, how we will do? Right. First, for that, I will use break even point. Margin of safety and break even point are one another same. Margin of safety plus break even point is equal to sales. That's what the meaning is. So break even point, if I need, it is sales minus margin of safety. What is the sales? Sales, let's say assume it is 100%. Margin of safety in my first case is 25%, and net effect is 75 percentage of the sales. So now break even sales will become 75 percentage of 12 lakh. What is the 75 percentage of 12 lakh? 75 percentage of 12 lakh will become 9 lakh. Now through this, I will find out the fixed cost. Then only examiner will allow me to given marks. So how the what is the formula for to find out the fixed cost? It is nothing but break even point into PV ratio. What is a break even point? Rupees 9 lakh into 40%. This is an alternative formula which you need to be remember. Break even point into PV ratio is equal to 9 lakh into 40. 9 lakh into 40%. 9 fours are 36. So it will be 3 lakh 60,000. 3 lakh 60,000 will be your fixed cost. In which working note you have find out? From the working note 3, you can say 4, or you can alternatively put 3 and 4. Okay, now you find out the fixed cost. Now my final working note will be to find out the profit. How you can find out the profit? It is basically nothing but contribution minus fixed cost. The contribution is 4 lakh 80,000 minus 3 lakh 60,000 is equal to rupees 1 lakh 20,000. So my final answer will be 1 lakh 20,000. But what our CMA students do know, they will simply put this box. They say that this is a 60%, I will don't do any workings. So the obviously the examiner will give you just 1 or 2 marks just for a mere presentation. Okay, whatever we find out, this is for 2014. Now it's time to move on to 2015. Okay, use black pen in your examination, which will be helpful for you. Okay, I use personally black pen. I recommended to use black pen as well. Now coming to note number 6, they said in the given question there will be no change in the variable cost. They say there should be no change in the variable cost. So what you are going to do, the variable cost is going to remain same, but the point is variable cost is equal to rupees 7 lakh 20,000. In brackets you will write down same as 2014. Okay, once it's done, now come to PV ratio. In the current year they are given 100 by 3 percentage, which is equal to 1 by 3%, 1 by 3 on sales value. You need to find out. But you know one thing, if variable cost is there, PV ratio is there, PV ratio is 1 by 3 on sales, obviously PV plus VR is equal to 1. If PV is 1 by 3, then how much is VR? So VR is equal to 1 minus 1 by 3 is equal to 2 by 3. So VR is equal to 2 by 3. Basically, VR is equal to 2 by 3. What is this 2 by 3, sir? 2 by 3 is a variable cost. If this is 2 by 3 is a variable cost, from this information, okay, I will write it again. Shall I say sales into variable cost ratio is equal to variable cost? Now I know the variable cost. Now my variable cost is going to be 7,20,000. What I will do in the next step, I will take here in the step VR, that is VR or VCR will be 2 by 3 into sales. If I need sales, it will become 7,20,000 into 3 by 2, reverse calculation. If I do the reverse calculation, my sales will become 10 lakh 80. This is how the reverse calculation I will find out the variable cost, that is sorry, the sales. I will write down 10 lakh 80,000 and my working note number is 6. Okay, this is a main working note in this sum. Okay, next thing, I will go with my working note number 7 to find out already variable cost we know through the information. So directly I will go with contribution. Contribution is nothing but sales minus variable cost. So sales I know 10 lakh 80,000. Variable cost I know just now through the information I find out 7 lakh 20. So net effect will be 3 lakh 60. Okay, immediately I will go there and here I need to write down is 3 lakh 60,000. Even the variable cost, what you can write down, uh, basically you can write down in note number, like say given answer will be 7 lakh 20,000. Okay, next thing, contribution I find out, working note is over. Next, through the break even point by using the margin of safety, I'm going to find fixed cost, because the information of margin of safety is there, so we need to use that. 10 lakh 80,000 is my sales, right? Minus 40 percentage of 10 lakh 80,000 will give you 10 lakh 80,000 minus 40, 10 108, 10.8 into 4 will become 43.2, right? So it will be 4 lakh 32,000, which is equal to 6 lakh 48,000. This is not my answer. Ninth one, fixed cost is equal to break even point into PV ratio. Okay, by solving the sum, there is an alternative technique also. Okay, you can directly do sales minus variable cost in the posting and then balancing figure, everything you can do. Okay, into 1 by 3 you will directly put. If I put 1 by 3, it will become 2 lakh 16,000. Even you can put 100 into 3 by 100 and 100 by 3 percentage. So I will go here and I will write down working note number 8 and 9. What is the value I find out? 2,16,000. Okay. Slowly, steadily, we will learn. After some videos is there, I will quickly get you through the sums. Last working note is to find out the profit. Sir, I don't want to simply a contribution minus fixed cost is profit. Yes, you need to write down. Okay. Contribution minus fixed cost is equal to is nothing but 3,60,000 minus 3 2,16,000, which will give you 1,44,000, right? You can take a calculator and write down 1,44,000 10th working note. So this 10 working notes will give you 10 marks. Basically, this working notes carries maximum marks. The margin of the statement, contrary, the comparison statement will carry 1 or 2 marks basically. Okay. So if I want to give some more note towards it, why I had taken this variable cost in 2015 and 16 is same. I can give some working note towards it. Note what you can write. Since there is no change in volume, merely a reduction of selling price alone. So total variable cost will remain same for both 2014 and 2015. Okay, only change in PVR, that is profit volume ratio. Okay, how you can find out the by using the profit only change in the PVR. So PV ratio for 2015 is 100 by 3 percentage or 1 by 3. Hence variable cost is equal to 1 minus 1 by 3, which give you 2 by 3. Hence sales figure is derived. You should write like this. Sales figure is derived for 2015. If you write like this, then only they will give you 10 marks. Okay, in the description below, you will get this PDF in the Google Drive link. Just go download it and share with your friends and enjoy the learning with Harry Academy. Do like, share, and subscribe to our YouTube channel. Have a great day, guys.